This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Dustin Hoffman.
Well, good day, everyone, and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Today is Monday, January the 8th, 2024, one day after National Bobblehead Day. You should have been able to celebrate that. I did. I added two more to my collection, but that's a whole other story for a whole other time. Coming up a little later in the program, we're going to talk with Purina's Adam Cardwell. He's a senior risk manager. We're going to be talking about their dairy risk management program, kind of supplemental to the programs offered through the Farm Bill if they get one updated. But that's a whole other topic again. We'll also take a look at that very snowy, wintry ag weather outlook. But first, let's run down the markets.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
All right, we're at the end of another trading day, first Monday trade of 2024, and I wish I could say it was better than the other days have been so far, but we're with Robin Schmahl of agmarket.net. Wow, Robin, another just down day again. It's just not a good start to the year.
No, it's all about weather, weather in Brazil. You know, years ago, it used to be we had weather markets in June and July in the U.S., but now it's weather markets all year round. More rain in Brazil, cooler weather for a period of time here, and then until they get to a high pressure ridge, maybe this weekend, first part of next week, which isn't going to be detrimental, to the crop at all, but it's all about weather. That's the focus right now. WASDE report won't come out till Friday, so that's not an issue at this point in time. I think a lot of the traders are kind of looking at how our start was in the U.S. this year. We had some pretty dry weather into that through planting into that June, July period of time, and once we got rain, we came up with near trend line yields. So, it might be similar in Brazil, only they're a little bit different, obviously, but that's what's on the traders' minds right now. Now, along with that, their export estimate for the month of January is expected to exceed last year by nearly 400,000 tons. Now, and that's according to one of their grain export groups in Brazil. So they're looking at a lot higher, export out of the country during this month. On the other side, Safras Mercado did reduce their estimate for beans in Brazil. Now, their current estimate is 151.4 million metric tons. And that was down from their estimate they had in December of 158.2. So down significantly, but still a large crop. So you look at that kind of a crop, you look at stepping up some of the exports. It doesn't really paint a real strong picture for prices right now. Now, export inspections didn't help the soybeans at all. On the report today, beans were at 24.8 million bushels, down 10.8 million bushels from the previous week. Corn and wheat, however, did perform well. Corn was at 33.7 million bushels, up 11.3 million bushels from last week, and wheat was 18 million bushels. That was up 7.9 million bushels from last week. But even though we had that in the corn and in the wheat, that didn't really make a whole lot of difference there as well. So that was just something to put into the spreadsheets to kind of give us an idea how things are performing. Now, wheat was hit kind of hard today. Couple of things there. One of the unions of one of the main grain handlers in Canada, they delayed their strike that they were calling for, suspended that strike until they could vote on a contract that's up and coming. Now, they're one of the largest handlers of wheat and canola, a couple other products as well, but mainly wheat and canola. And then the market was disappointed. China didn't buy more wheat. I mean, there was rumors last week that China was going to buy more wheat. That really didn't materialize. So there was a disappointment there. Plus the snowstorm that's coming through again was going to alleviate some of the dryness that had been prevalent in some of the areas of the Central Plains, leading into this fall, into this winter. So you had a couple of maybe triple whammies there that really put the pressure on the wheat market. Now, thankfully, we didn't close on the lows today on all of those contracts or all of those commodities. We bounced a little bit, whether that means anything or not, maybe just some quick profit taking on the down day today by some of the scalpers of the market. But beginning the week does not look very good. But sometimes when the market looks the worst, that's when things can change.
All right, so then moving over to livestock, with grains being down, are they able to take advantage? I know hogs have had really a big struggle. How are those cattle and hogs performing right now?
Well, cattle, first of all, we did see stronger cash last week. Began the day strong today, but it just really ran out of gas. The follow-through buying didn't maintain itself for very long. Live cattle closed lower. Feeder cattle were able to maintain some strength in closer contracts. Some of the later contracts closed in negative territory. We really had almost a $3 price swing in the market, most of the strength being early on. The winter storm that's coming might limit some of the cattle movement this week, but it's also going to reduce cattle performance in the feedlots. And feedlots really are hoping still for higher cash this week. We did see some higher cash last week, but we're looking for some higher cash this week. That may materialize as packers need to step up and purchase for a full week. Now, last week, most of the trading was light and it was delayed, a lot of it till late in the week. So packers really didn't want to step up to the plate. So they might need to be a little more aggressive today. Now, box beef at midday was up $1.18 for choice, but it was down 10 cents for select. Now, interestingly, at the close of last week, we had a box beef price and a dressed cattle price almost the same level. That's very unusual to see those two come that close in line with each other. So again, not that means a whole lot other than we've been seeing a trend lower as far as box beef was concerned because of demand. Now on the hog side, another day of follow through buying, 3 consecutive days now that really pushed the hog market back up into the sideways trading range that it's been in since basically the beginning of December. So it's more comfortable now as far as the futures are concerned or traders are concerned because it's back up into that level. But it has to maintain itself there. So closing or trading within that trading range, we could consider it as a victory, but whether we'll see the follow through of some support on the cash and cutouts is really going to be the key here, whether demand was good. Now, the National Daily Direct morning report didn't show any cash prices because of packer confidentiality, or more likely they didn't get all of their numbers in to really put out an accurate number. So we didn't get a lot off of that, and cutouts at midday were down 25 cents. So initially, we're not looking at a lot of, again, follow-through strength. Underneath the futures market, we saw lower cash, lower cutouts on Friday. So the market's kind of moved more technically, and that's a little bit concerning because if we're not followed by cash, we could drop down lower again tomorrow or just continue to trade sideways in this trading range.
All right. Well, Robin, a lot of information there. And if folks want to unpack a little bit of that with all of you at agmarket.net, what's the best way for them to reach you?
Well, they can call me directly if they would like at 877-256-3253 or go to agmarket.net. There's an 844 number there. They can call in and somebody will pick up the phone and talk with them.
All right. Well, Robin, thanks so much for the insight. We'll talk to you again next week.
All right. Thank you, and be ready for the snowstorm.
That again was Robin Schmahl of agmarket.net. Let's go ahead and take a look at the closing numbers from the Iowa Agribusiness Radio Network market screen.
March corn was down 5 3/4 at $4.55 even. March corn down 10 3/4 at $12.45 1/2. Soy meal down 90 cents at $3.6850. Soy oil up 18 cents at $47.81. Chicago wheat down 19 3/4 at $5.96 1/4. Kansas wheat down 12 3/4 at $6.15 1/4. Minneapolis down 9 1/2 at $7.02 1/2, and oats up 8 cents at $3.61. Live cattle for February down 62 cents at $169.95. January feeders up 75 cents at $223.87. Lean hogs up 60 cents to $70.60. Pork cutouts up 65 cents at $83.55. Class 3 milk $15.15. That's 3 cents higher.
And that's been the market recap. We're going to take a short break here from our sponsor, the Iowa Soybean Association and the Soy Checkoff. And when we come back, Adam Cardwell of Purina talks to us about dairy risk management. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to AMPM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Well, we know the dairy industry has been under pressure for the past 5, 8, 10 years, depending on how you've shaken out here in the industry. And we know that there are programs in the Farm Bill that help you mitigate some of that risk. Now, whether or not the Farm Bill is updated here for 2024 is not the issue. The fact is, more risk management is needed, and the folks at Purina have a dairy risk management program that they are offering to producers. Adam Cardwell is a senior risk manager, and he talks to us about the program.
Right, so dairy risk management, let's go with the 30,000-foot view. I mean, what is it all about, and what's Purina doing and Land O'Lakes doing to help make that happen?
Yeah, so, risk management, we like to define and put it in as simple terms as we can. How do you buy stuff? How do you sell stuff? And what's the bad thing that can happen in the middle with the margin, and how do you manage that, right? And it's about the management and focusing on the finances, the math, things that are, we can get a hold of in a way. I mean, there's so much from the outside that's attacking us at all time, right? Macroeconomic factors, whatever, supply and demand stuff. But so we can't really get a hold of that. But looking internally at the farm's finances, looking at cost of production, right? How do you buy stuff? And then how are they paid for their milk, which differs regionally. And then syncing up a strategy for that particular dairy, because there's no one size fits all. And that's really, I think, what separates our approach, is that we look very closely in depth of the dairy to make sure the strategy is appropriate for it.
So what kind of tools do you have available then for producers to help mitigate that risk?
Yep, so there are traditional tools such as forward contracting. Some people more advanced people, we see a spectrum of experience from 0 to 100, right? And depending on where they are in that journey, we like to fit it to that to make them comfortable, because it's a scary space. It can be. So we like to best deal with the emotion of that. And we started out primarily as a member-focused, we're a member-owned co-op, but now we're expanding this to everyone and anyone, Purina customers alike, because we're all in the same space, and we're seeing the consolidation happen all the time, and we want to help manage with that. I mean, we're about sustainability of dairies and producers, and it's a complex game, and we want to offer a more complete package to the customer, along with, hey, best nutrition in the world, hey, we can help you with risk management, or hey, we can help you with risk management, we can feed better too.
So how do we get that difference? How do we differentiate dairy revenue protection from dairy risk management?
Sure. And dairy revenue protection, the insurance, is one of the tools to use, and we like the tool a lot because it's very accessible, it's affordable. The premium paid is subsidized by the RMA by about half, give or take, depending on the coverage and where you are. And it's a quarterly offering, but the beauty is it leaves the top side open. So we can devise strategies to say, hey, let's put a minimum floor on your revenue, which it is a revenue product, not a price product, right? And it's based on regional geography and production. So it's a more effective tool as opposed to just price. It's true revenue management. And we can develop dynamic tools and strategies around this, buying the DRP. Say we get a big rally, we talk with the dairy, hey, look, at this price point, let's lock in a harder margin. And bankers, lenders really like plans like that, because depending on the goal of the dairy, right, if they want to expand, and and we want to understand that too. Like, where do we want to go? Where do we want to be? And how do we help you get there?
So obviously we know dairies are a situation where they have been really under pressure. Dairies are disappearing. Dairy farms are disappearing at a sad rate.
Yes.
How can this help save the ones that are left, and maybe even be life support to those that may be on that fence?
Right. And this is it's a need now, right? It's not just something that's out there and maybe you do, maybe you don't. This is a need now because the space is shrinking, and it requires a more offensive approach, right? I mean, you can decide to do nothing, but if you do nothing, we want that to be the strategy on purpose, as opposed to, well, I'm doing nothing because I'm afraid or I don't know what I'm doing, what have you, and that's common. And we want to help with that and kind of shrink that and use, the simpler terms like that. How do we buy, how do we sell, and let's understand that stuff first. And then build and layer and take them on the journey with us over the long term, because it's a very long game, right? So it's something you got to stay in for a long time. And
all right. So where can producers go to learn more about these programs from Purina and how they can be a part of their operation?
Yep. Contact your Purina sales rep. I would start there. We are aligned with them. I mean, this is the full service offering, teamwork approach. So contact your Purina sales rep, and we'll take it from there.
All right. Well, Adam, I thank you so much for taking the time to visit with us about these topics today.
All right. Thank you, Dustin.
That again was Adam Cardwell, Senior Risk Manager at Purina. Let's go ahead and take a look at that ag weather forecast. Well, cloudy skies to start the day. Snow is promised and on the way, and check local listings as whether or not you are getting it at this time or not. 6 to 12 inches is the forecast for much of the state, and of course, blowing snow, making visibility also an issue. But of course, that is something, again, check local listings to see what's going on in your area. But let's see what the National Weather Service has to say about this snowy forecast in the next 24 hours.
Well, again, winter storm warnings in effect across the state through tomorrow. Check local listings as to when yours ends. But we're going to see highs today in the low to mid 30s with that snow beginning to fall throughout the day. Tonight, winter storm warning continues, as we've said, and the lows will be anywhere from the upper teens to the low 30s. But then tomorrow, that winter storm warning continues, expecting accumulation between 6 to 12 inches across much of the state. Temperatures are also going to fall throughout the day tomorrow. Look for highs to begin with in the upper 20s to the mid 30s, but those temperatures falling throughout the day. Looking at the affiliate weather map for tomorrow, Cherokee, snow and 29, Shenandoah, snow 24, Des Moines, snow and 31 degrees, Waterloo and Albia, both snowy and 32, and Clinton, the warm spot, snowy and 35.
And that's been the Ag Weather Outlook, and that brings us to the end of today's show. You can find all our content online at iowaagnet.com, as well as on our Facebook, X, LinkedIn, and our YouTube channel. You can also subscribe, hit that bell icon on YouTube to get notified each time we put out a new video project. Also, don't forget about the free market podcast sent right to your mobile device through Google, Apple, Amazon, Spotify, and Podbean from the Iowa Agribusiness Radio Network. From the IARN studios in Des Moines, I'm Dustin Huffman. For Mark Magnus and Riley Smith and Andy Peterson, we thank you for watching. This has been Ag Matters PM.